So I'm definitely going to make sure I record this training and upload it to the YouTube channel, like the ones we did last week. Kind of like a midweek review, so we kind of see exactly what this thing's doing. Gonna kind of clear my mind of all biases and do a fresh top-down analysis. Hey, welcome, welcome. As I'm stating, we're gonna go ahead and do a mid-room. Hello, mic check. Can you hear me? iPhone, you there?
Yo.
How rude of me, man. How was your day, my guy?
Man, man, they tired, man. They laying down right now.
All right, perfect, perfect. I'm glad you came into the session, all right? So
Mm-hmm.
yeah, now that we have at least one more person here, how was your experience in the markets today?
You talking to me or somebody else?
I'm talking to Miss Darbs.
Oh.
Today was not too good for me.
Huh?
Today was not too good for me.
Wasn't too good?
Nice,
All right.
made some profit.
Oh, that's a good. Profit is
And then
always phenomenal.
after news today, it kicked me out in break even. And then I had re-entries that like just kept buying and buying.
What were your stop loss on the re-entries?
Sorry.
I was wondering, I wonder how much pips were you using for your stop loss on the re-entries?
I don't know. I mean, I do 20 pips. 20 pips. At times it kicks me out. It kicks me out most of the time when I do 20 pips. At times when I do 30 pips, it keeps but at times 30 pips is too much of a loss. So if I have like two, maybe I should work on my risk management because I don't know.
That's what I'm
I
saying. I'm
make I
gonna
do
go
a
over.
lot.
I could have sworn we had a whole training about that yesterday, so
Yeah,
we
last
can
night
make
was good.
it clear today. But again, you guys have to understand this is a psychological game. I showed you guys the risk management calculator. I showed you what 3%, 5% a day can do. So whatever is in your mind that tells you you need to make $1,000 a day, that's what's going to keep us in the hole forever. We have to compound it. We have to compound it. Every time I drop a screenshot, there's a reason why I circle my balance so you guys see. I'm never starting with more than 50. So, Miss Darbs, it's simple. If you have $200 in your balance, that's way too much money. How much money do you need to make for the day? Let's talk about it.
So my balance went from it's so
No, 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 no,
embarrassing.
no, 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 not your balance. I just want to know how much do you need to make as a trader and how much do you want to
I
make as
don't
a trader?
know 20 pips at times, but it depends.
No,
Yeah.
how much money? Because that's why you can't control your risk because
How
you
much
don't know
money?
how much money you want to make. Again, I sent you the Forex calculator. Your goal should be only 10%. Once you make 10%, you
Yeah,
should
my
be
goal
out
had
the market. So every time we're
so
in profit,
initially I had 1K, it gone down now.
that's
So I
what
have
I'm
to
saying.
recalculate it.
That's what I'm saying. So again, hear my question, all right? Because again, if we don't think, okay, we have someone else. Hold on.
Everybody phone. Hold on,
Hey,
man. Hold on.
hey, Tristan, you there? Hey, T, you can hear me?
Yeah, I'm here. I had to fix this for this baby right there.
No, not you, not you, not you, Z.
Yeah.
I was talking to the person that popped up. All right, guys. So we have one more person in the background. Let me introduce him. All right. He's
Okay.
actually the person who introduced me to the whole concept of maybe there's another way to make money. All right. Grew up with this man, met him at church. He's still, I think, to this day, one of the best drum players I ever met. And I don't know. I see him throwing some stuff. I think probably 2011, 2012, maybe even 2013. He was throwing all type of stuff online, and
Let me
I
put it
seen
for you.
I saw another person that was at my park all the time playing basketball with his family and he was there from like 1 p.m. in the afternoon to like 9 p.m. at night. And I was like, what the heck do you do for money for your wife to be out here? You got your baby, and he's like binary options. Then I asked my mentor, the first person to introduce me, Mr. Tristan, to tell me all about it. You feel me? So again, he's been kind of watching my work, and we've been discussing just the markets the past few days. And I just thought, hey, if you want to stop on by and see what the training's about and exactly what we cover, all right? So hey, if you want to unmute yourself or say a few words, you're good to go. But if not, I'll just pick up where I left off. All right, so I'll go ahead.
Fine. You can go ahead. It's fine.
No, you good, man. I felt like I ain't here in a few weeks, man.
I'm just I met Adrian through church. But yeah, I think I've been trading now for 8 years. Started doing binary options. I don't do binary as much anymore. I do the regular Forex now. But yeah, Forex is great. You know, it's a great skill to learn. When you learn the skill, you'll always have money coming in. Doesn't matter what economy you're in. So it's great.
That's phenomenal, man. Thanks for the words, all right? I'm gonna continue where I left off. Now let's see here, Miss Darbs, all right? You've been in the market for a while because we've been in the same trading group for a while, all right? The new people that's in the background, you guys just listen. I need you to understand this concept, all right? Everything I'm teaching you the right way from the beginning. The goal is hopefully 30 days, 90 days from now, you only have good habits, okay? So Miss Darbs, I started with $40, all right? Flipped it 40 to 400, flipped it to 1,000, took some money, paid my rent and everything, and now I'm back up to 1,100, all right? Yesterday when we took the hit, I took 5 losses in a row. I was overconfident and I was putting 2% to 3% every time I entered, all right? So 2% to 3% of what? 1,000 is what, 20 bucks, 30 bucks at a time? That's all that's in my balance. Worst case scenario, if I lose that, there's no way, no how my wallet get touched. I've been in the markets where I've had 1,200 in there and I'm in profit 600 and I have a stop loss that's 50 pips in cushion. And the brokers say, hey, there's something called slippage, okay? And with the brokerage, when they say there's something called slippage, because of how fast news spike, we all see in 1 minute, news could move 100 to 150 pips at a time. Because of that quick movement, because of all the liquidity that's coming in from the banks and things like that into the market, because of all the liquidity that's coming into the banks and everything that's coming into the market, the money moves too fast for the brokers to respond. So by the time they respond, your stop loss is like null and void. It's like a stop loss is not there. So what I've learned through my experience, hey, let me change my concept. Instead of thinking I'm gambling, if I lose the 40, if I lose whatever, I lose it. Let me think that I'm an investor. I'm putting up this money as an investment. Once I'm in profit, my goal is to reduce my investment risk. I've found out typically most traders, um, the only way you could get your money out is you have to close your positions, right? And then you take your profit. Then you have to re-enter and you have to deal with finding a new position. That's the first problem. Number two, you have to deal with giving up your good positions that you had. And those positions might be good for 12 to 24 hours. Through my experience of winning and losing money, I've found out that, hey, if I'm in the market $20 and I'm up $30 in profit, I can actually withdraw my balance without closing my positions. Now, when I do that, obviously it lowers my leverage, but my positions are so good that I would rather remove my initial investment and I'd rather trade the profits than I'm already up. Also, when I trade like that, it allows me to stop over trading.
So, Bubba, you ain't
One
going
moment.
to sleep, bro?
My bad. I had to get some juice on the charger. One moment. But yeah, as I was saying, it allows me to stop over trading, all right? I used to have a real bad habit, especially when the money starts going in your favor. We all see news once it starts going, even if it's in your trend, you can start putting in extra positions and then it'll spike back for the next minute. So it'll spike up 50 pips in profit and then it'll spike down maybe 30 pips in profit. If you're just adding positions like how I used to do, because again, I'm trying to help you guys stop some of these bad habits from even happening in the first place. What happens is, again, the money's moving so fast, you're over leveraged too fast, okay? So if you take the time and the discipline to say, hey, before I take another position, I have to remove my initial investment. Worst case scenario, your eyes are going to break even, or if you're up $50 and you're at 0 balance or 84 balance, like what be happening to me, when the stop loss pull back, you might not get the whole 50, but you'll leave with 35. So you have your investment, you have a new 35. Now we wait for the appropriate pullback area, whether it's on an M30, whether it's on an H1, whether it's on an H4 or a weekly resistance, since we're looking for sales this week. And then we re-enter the proper way, okay? That's how I've been scalping. And then when it goes for the big hit, I get all of that. It's still good money. Any questions so far? We talked about risk management and we talked about trade management so far, okay? So risk management 101, real simple. If you have $100 in your account, I would risk 10%. If I have $10 only, I would risk it all. I would risk it all. I would put as much positions as I can. I would wait till 80 says, hey, this one of those fire positions. I think it would hold for the next 7 days. Be like, bet, that's the one I need to slap. You slap that position. 4 hours later, I'm probably going to call another re-entry. Your $10 will probably be up $30, $40 in profit then. And then you use that profit and you double down, you triple down on the re-entries. By the time the day is over, we close everything. And now you might be at a balance where, hey, I don't have to risk the whole $10. I could own, or I don't have to risk my whole balance anymore. My balance is now 200. I can risk 10%, which would be a dub. I can risk 5%, which would be 10. And you just do the math that way. Typically, when I take a setup, if we lose, we lose. But when we win, we're winning about 4x to 5x, whatever we risk. But the markets have been moving real sporadic for NFP week, so it's been in our favor. So it's moving a little bit bigger than normal. In 3, 2, 1. Okay. Give me 1 second. Let me share my screen. All right. I'm gonna pull up UJ for the week so far. Miss Alpha, as I'm pulling up my screen and everything, do you have any questions about risk management? About what to do? Actually, I'll ask you a question, Miss Dart. If you have $2,000 that you want to trade with, right? You uploaded 2,000 in your account. How much should you risk for each position? The dollar amount.
Well, if I
Or
have, I don't know, if I have
go ahead.
2,000, I usually use 0.70, and I probably would take about 3 trades.
All right, so 0.70. That's not bad, all right, but that's bad risk management, all right. Because if you have $2,000, already know what you're gonna do. You're gonna upload the $2,000 to your wallet. Then you're gonna transfer the $2,000 to your trading account, and then you're gonna take 0.07 entries. Correct?
Yes.
That's incorrect. Moving forward, Please, guys, I need you to understand.
What is
Moving
this, bro? Who was
forward
drinking this?
for the scenario, again, I'm making it clear for the scenario. If you upload $2,000, you have a wallet, which is the savings account, and then you have to transfer the money to the trading account, okay? If you
Mm-hmm.
have $2,000, do not trade what you're not willing to risk. If you put the 2,000 from your wallet to the trading account, you're risking 100% of your balance. You're always over risking. You're wrong. That is bad risk management. That is not risk management. Moving forward, do not do that.
Okay.
I don't know if I can make it any clearer. So again, if you upload $2,000, you keep 2,000 in your wallet. You say, self, Adrian says we're risking 1% to make 3 to 5% a day. We've been making 10 to 20% sometimes. 3 to 5% over a whole year is going to compound to more than $1 million. You told me Adrian put in 6, 7 months, and we saw 2.3 million in 7 months if we do this the right way.
Yo,
So again, there's a right way and there's a wrong way to do it. If you upload $2,000, I would not risk more than 5% in a day. 10% of 2,000 Miss Darbs is 200, okay? Half
Mm-hmm.
of 200 is $100. So if you upload $2,000 in your wallet, you should only move $100 from your wallet to your trading account, meaning 1,900 should be left over in your wallet. Meaning if anything happens, you still have 19 chances to re-enter the market. 19 chances to take 3.07 entries with $100. When I say tell people max out, they're maxing out with $10. With $100, you can max out with 5.07 entries. That's how much I've traded with 0.07. That's how much I know the math off the top of my head. You could even do more than, yeah, you could actually do more than that. But that's not, you could do 7 entries actually, but that's not the point, okay? The point is, even with 7 entries with $100, that is horrible risk management too, because you're risking all your leverage, okay? But there's a method to our madness, okay? So again, I would not tell you to max out. Typically, like when we start Asian session, we start with your, let's say you're in that scenario, right? You would risk 1%. 1% of $2,000 is only 20 bucks. When you see my screenshot and I'm saying, hey guys, I'm up $30, $40, that would be your cue. And I say, hey, make it risk free. That would be your cue to step number 1, move your $20. It stops you from taking extra entries. It stops you from over risking yourself. All right, once you take the $20, you might be up in profit $40. Now you can take re-entries, but you don't just take re-entries off the rip. You have to maybe ask me, maybe look at the market, check the M5, check the M15, make sure price is at a good area for an entry first, and then you use the profit so that way you try to eliminate any possibility for drawbacks, okay? But that's as detailed as I could get about risk management. Again, guys, it's your money. You have to do it your way. But if you lose 5 trades, 10 days in a trade in a day, that should not be 100% of your wallet. If you could understand that concept today, you'll save yourself 2 to 3 years of losing money.
You know, I never
One
understood
trade,
it this way.
one trade should not make you lose 100% of your wallet. You should not
Yeah.
put 100% of your wallet in your trading account ever. You should not put 100% of your wallet in your trading account ever.
Got it.
I think I hammered that point. Anybody else listening? I know Miss Darbs ain't the only one that even want to know what risk management is, but it's simple. When it comes to money, we're not gambling over here. We're going to work it 8 hours, 9 hours, 12 hours, however much time you have. But worst case scenario, we could do it the right way. All right, now we got that out the way. Now let me share my screen. Let's review this thing and let's see what the heck going on with the markets. Screen start now. Okay. Okay, so that's why we have stop loss in place. Let's take a look here, guys. This is the M30, all right? According to my strategy, all right? Before I even begin, guys, I'm not sure where your level of Forex is, so let's take it from the top, okay? Forex, what we do daily is the trading of money. I train mainly USD JPY. I can trade other pairs. However, I read somewhere one tip by a billionaire. He said, "Hey, you don't need to be good at a lot of things. You need to find one thing and just be the best at it." So I'm working on USD JPY now, okay? Now, right here, guys, let's talk about what we're looking at, okay? This is a candlestick. Candlestick, again, it's just a representation of price. Don't worry about that for two now. What I really want you to worry about is this dotted line right here, okay? This dotted line is a separation between yesterday and it's a separation of today, okay? So yesterday, today. Now, this dotted line in Forex, even though let's say the day starts at midnight for us, in Forex, the day starts at 5 o'clock, okay? So 5 p.m. or 4 p.m. would be yesterday in the day, and 5 p.m. to 6 p.m. would be the brand new trading day or the brand new 24 hours, okay? So bam, the way how my strategy, well, let's take a look at yesterday before we do anything. Let's take a look at yesterday. There's a reason why I was feeling all type of ways about yesterday, all right? First things first, let's go to the H1, go to the H4, go to the daily. All right, bam. All right, yesterday before it sold off crazy, right? Let me zoom in. All right, guys, again, we're looking at just the chart. This is a chart of USD JPY. USD JPY, to make it simple, it's just something that you can trade, like how you could trade Apple stock, you could trade Bitcoin. It's just something that you could trade, okay? Now, if you can anticipate it going up and you're right, you make money. If you can anticipate it going down and it goes down,
Oh
you make
my.
money. If you can anticipate it goes up, but it goes down, then you lose
No.
money. If you anticipate that it's going to go down, but it goes up instead, then you're going to lose money as well. So it's a very easy way to make money, and it's a very easy way to lose money as well. Now, guys, this we're in Wednesday, right? So this is Wednesday. All right, no problem. This was Tuesday, and then this was Monday, all right? And this was Sunday. So the market opened Sunday before the week started, guys. I know that this is going to be a sell week because based on my strategy, there's a few things here, okay? Just like a mechanic have his tools, as a Forex trader, I believe in using tools to help you understand and get the results that you're looking for. Now, we all know there's different levels of mechanics based on their skill sets. So I don't believe that there's anything wrong with the tools. It's just something wrong with the person as a trader, okay? Now, the white lines right here is something called a Bollinger Band. It typically traps price in a certain range, okay? You hardly see price outside the Bollinger Band. There's an upper area, or like, think of it like a bowling alley with the guardrails. There's an upper area right here, and then there's a lower area right here, okay? And if you look all through, if you just look all through, you'll see that price typically stays within my white line. So my white line or my Bollinger Band allows me not only to know the flow of price, but also allows me to understand it. And once you understand it, then you get to learn how to take advantage of it. But bam, as I stated, each of these bars represent a day. So this was the months of February, this was the months of January, and this was the month of December. But we're back in March, all right? March is a fresh new month. All right, so let's take it from the top, all right? The strategy. So looking at the H1, all right, guys? Yesterday, I knew yesterday was going to be a sell day because I did what's called a top-down analysis, all right? Typically on a top-down analysis, it allows you just to see how price is going to flow. And I started from the weekly. I didn't like what I saw. I went to the daily and I loved what I saw. Or what did I see on the daily that was so important to me? When price ended Friday, price bought Friday and it bought Thursday and it started buying Wednesday of last week. When it bought Friday, it stopped or created a wick at this high point at 150.98 and it respected resistance underneath my middle Bollinger Band. When Sunday started right here. It attempted to buy up, respected the last wick, and it touched the Bollinger Band. I started calling sells here. When it did that and it started pushing down, whenever price attempts to touch a Bollinger Band or AKA a support or resistance area, whether it's a Bollinger Band, a EMA, I like those. I don't believe in trend lines because people draw trend lines on there and they don't understand the concept. But if it's a tool like a Bollinger Band or an EMA, something that tracks the average of data for a significant amount of time, I like those tools, okay? So this tool told me that, hey, Friday tried all it could and it couldn't go any higher than 150, 151. Sunday tried as hard as it could. I saw it here and I said, hey guys, put a 30 pip stop loss on it. 30 pip stop loss survived and it started melting. The day ended all the way down here, or it went down here, it ended here, and this was Sunday to Monday, okay? Now, Monday to Tuesday it started down as a sell day. We can tell this because price came, you see this long wick down here? The reason why I can tell price went this way first and then went this way second is because the candle closed as a green candle, okay? Because it closed as a green candle, I know that price went from here, closed here, flowed here, and then touched back here, the next resistance level. So when yesterday started, I started calling entries here, started calling the stop loss above here. The first stop was broke, news and everything wicked up, but because price was touching my first daily, again, the D1 chart, in my opinion, based on trading, shows a direction for the next 30 days. So if I believe that this is going to trend south for the next 30 days or be a sell month, and the blue line is under here, that tells me every time price comes here, instead of look for buys, look for sells. With that understanding, we were able to continue and get a full day today of sell pressure to where it closed here, okay? Now the day started here, and let's take a drop down because right now, according to the chart, it's not ready on the daily level. But let's take a look at the H4 to see what the H4 is saying. Now, the H4 shows in my opinion, shows a direction of price for the week, okay? We see here price started off, the white line was on the blue line, which is price, in my opinion, was over the middle Bollinger Band. We see that price came inside of it, wick down, and it exploded out of it, okay? I knew again that price, this was going to be a sell because even though price wicked up outside of the Bollinger Band, because the body closed here, and this wick is the same level, I said to myself, this is the high of last week. If this week is attempting to test last week's high, then 9 out of 10 times it should respect it. If it respects it, then I can anticipate the next 7 days being stop loss held. Anytime
I'm with you,
price is
boy.
at my top of the Bollinger Band, I know without a shadow of a doubt, I can
So,
close my eyes and bank on it, that price is going to come all the way down to the bottom of the Bollinger Band automatically. Now, it took 4 hours, 8 hours, 12 hours to happen. But
hey,
I
Dread,
already
I'll be back
knew.
on there, Dread. All right?
Yeah, you could go.
All right.
Yeah. So as I said, I knew price was going to go from 151 all the way down to 149. I knew that guaranteed. If I wanted to wait outside or wait for the Bollinger Band, that's just me being greedy. But I knew it's going to drop to this point, so I was calling re-entries. But I was just practicing my risk management because at the end of the day, the goal isn't to win money. You could win a lot of money and lose a lot of money. That's easy. but can you compound it every single day and stack it up for a whole year? That's the mission I'm on. So I played it right. Now, yesterday, my mentor said, hey, AD, I think it's he said, hey, I think it's gonna finish selling off and it's gonna buy. I didn't want to believe it because again, it's still a sell week. But after this candle right here, where the H4 closed as a full green, and the previous and the next H4 candle did a baby wick and it started to go green, I should have understood that price, the sell pressure is over because this is on an H4 level. It took a whole 8 hours. In 8 hours, price not only stopped, but it grew in 4 hours time. So I should have known, or anytime you're in this situation, you have to understand that, hey, price is looking to challenge the next resistance area, okay? Next resistance area on the H4 level was right here. It broke through, it challenged the next resistance area, which is my 50 EMA. Once I saw price here, I looked to my right and I saw that that number was 149.98. That number is a major quarter point as well. So I saw a major quarter point. I looked to the left and I saw that price cross down. So my blue EMA is pointing down. What this means is not only does it want to sell, but it's my job as a seller, as a trader, to find what is the best sell area. The best sell area would be a resistance area. So I took a sell here, lost 1%. Took another sell here, lost 1%. Took another sell here, support held. Took a re-entry here, support held. Took a re-entry here, support held. Took a re-entry here, stopped out in profit. Took a re-entry here, support held, drop down. Took a re-entry here, support held, drop down. Took a re-entry here, stopped out, and now this is where we are in the markets, okay, guys? So based on everything I've said, I took an entry right here. If I get stopped out, I have to find out where this pressure wants to stop on this H4 candle, all right? Now, this candle is going to go till 1 o'clock in the morning, all right? If at 12 o'clock I see it hesitating and wicking up here, I might take a re-entry up here with another 30 pip stop loss. From right here is 50. 30 pips would put me right here at 80 or at 87, but it would put me above my 50 EMA. Now, guys, if I'm putting a 30 pip stop loss, all right, and I have $30 in my account, if I max out the $30 is going to give me $1.50 a pip, okay? The reason why I love Sway or Liquid Brokers, whichever their name is, the reason why I like them is if I know I'm risking $30, right? Because $30 is already 1% or $20 already 1% of my total wallet, but it's at such a great area, I am jumping in without a stop loss. Now, what typically happens is when price goes against me, one entry might close, another entry might close, another entry might close, another entry might close. This stops me from over trading and trying to take other entries thinking it's going to turn around and lose money. It's going to turn around and lose money. It's going to turn around and lose money. So when I enter my money, even if I wait for it to lose patiently, I'm only losing 1%. And let's say it takes me to this level, okay? I take a 2% entry here. Let's say this level lose. I take another 2% entry here. Let's say this level holds just like it did over here, okay? From here, guys, to here, that is 148.40, 150. That's 160 pips minimum, all right? If price decides to go and do the exact same thing, it should either A, bring the same low, or option B, attempt to create the same low here, or option C, attempt to create a new lower low, confirming the trend still valid as a sell month, okay? Said a lot. Do we have any questions? Anybody confused so far? Are we still on the H4? Let's go to the H1 so you guys could see a more detailed look. Again, the H1's like a magnifying glass. I already knew that they started as a sell, but guys, look how my EMA, the 10 EMA is crossing my middle Bollinger Band, which is the 20 EMA. As it crosses it like this in my mind, it is confirming that price is going to buy for the day, okay? Now, take a look at this, okay? This is a perfect example. Guys, do we see how the blue line was already over the white? And do we see how price was buying properly? Do you guys all see that? Not only was it buying, but it also crossed the 50 EMA as well, which in my strategy is a double confirmation. So you would buy these here, anticipating price to break through the 200 EMA, okay? Now let's look at what happened. Price attempted to break through the 200 EMA. It created a wick and it closed below it. Because it closed below it, if you were in buys, that would be your first indication to take your money.
Yo,
After it sells now, and then it buys back up to here, and you get another wick right here. Once you see this wick is lower, especially if it's lower than this wick, you have to say to yourself, self, dang, even though I hate to admit it, even though I want more money, I have to know if I want more money, buys isn't going to give it to me, okay? So if you're on the buys, take the buys. If you weren't taking buys at all, like me, yesterday we're waiting on sells, and I saw this right here. I need you to guys to know this rule of thumb, okay? This 200 EMA is very powerful, okay? It is so powerful that from my research, the 200 EMA is typically what starts the change of structure or starts the change of a trend, okay? Let's understand that. Let's look at one more day back, okay? Do we see how price was underneath the blue line, or the blue line was underneath the white, it was underneath the red, it was underneath the 200 EMA? This is a 1, 2, 3 quadruple confirmation that price is going to continue selling. For how long? Price is going to continue selling until you get another cross right here. Once you get this cross, you can start looking for buys guaranteed, okay? Now let's look how it worked in the past. Price came to the resistance area, sold off. Take your money. Wait for the next resistance area. You see that this resistance area created a tweezer on the H1. So that's a super confirmation, and it sold off and it created new lower lows, okay? Now you got a green hour here, another green hour here. This should be an indication to turn around, close all sales, and let the market breathe, okay? As you're letting the market breathe for about 4 to 8 hours, you see that not only is it going up, if you're anticipating a pullback right here or thinking, hey, last time price tested this area is sold down, it's going to do it again. Look what price, or the 10 EMA, what I like to call it, look what price decided to do, guys. As it's curving, price is curving with it. And as it curved up, this curve up is the first indication I need. I don't need the second cross, because once I see this curve, I anticipate the cross is coming. Once this cross comes, I anticipate the cross coming. Once this cross comes, I anticipate the third cross coming. Pause. Now, let's take a look at what happened, okay? So again, this was yesterday, all right, guys? Look how price, again, we got the double confirmation. We're in super buys from yesterday. We're making a lot of money. If we weren't in buys, like me, we were waiting on this thing to cool off, okay? Once it hit here, I started calling sells. Once it did this, I started taking re-entries. Once it pulled back and I stopped out in profit and I saw this wick, I started taking super re-entries. My mentor is on the line. He's like, hey, are you sure about this? I'm like, I am absolutely positive. You have no idea how much times I've lost money thinking it's going to triple cross. And every time before it triple cross, it always shows a pattern to reveal its hand. If it was going to triple cross, it would have shown me a double bottom. These wicks would have been down here, and the neckline would have been right here, and this leg would have broke upside the top. But because the leg didn't break upside the top, and look what happened afterwards, it sold off. This wick was a reentry wick I called super reentry wick. super reentry wick, sold off. Now, guys, as it's selling off and you see prices curving, you can anticipate the opposite way. Hey, once it curves, your sell has been confirmed. If it's on the H1, sales is good for the whole day. So if you see that, hey, the 200 EMA held, my price, the 10 EMA curved, showing not only did it go up, but it respected the 200 and it's curving, willing to go down now. And you see that it crossed right here. That's like a double or triple confirmation for sells, okay? Now, where for sells? I called sells right here and it was holding, holding, holding. This wick that came right here is a 20 pip wick. But if you had a 30 pip wick like what I had, a 30 pip stop loss right above this previous wick, it held and it started pouring like a madman. Called continuation right here. Now, price sold off right here, and this is the pot that we're in, okay? So, unlike yesterday, okay, the 50 EMA is doing exactly what the 200 EMA did yesterday, okay? I was calling sells from earlier because even though price is crossing right here and it sealed itself, I always put I always put a horizontal line. That's why they're all over my screen, so I can watch the wicks, how prices, the wicks are interacting with my support or resistance areas. Again, the EMAs can change from support or resistance depending on how price is flowing. The more you study, the more you understand it. You could take more UJ cells right now. And as you're taking those, I'm going to take some as well. If price cross back 140, 49 and it holds, we can guarantee that it's going to come down to here. From where price is to right now, my bottom of my Bollinger Band, that's 73 pips guaranteed. If price breaks through here, which is breaks through 148.33, challenge the 148.25 quarter point, got to go to a higher time frame to see that one. Now, if price breaks here and it goes outside the Bollinger Band, I see this H4. Again, guys, remember, I've been calling sells from this wick in here. Look how this thing is wicking up in the H4, okay? Guys, it's only 10:20 right now, and we're in a 4-hour candle. This wick, only because it's inside the alligator jaw, only because price is already crossed, it curved, it double crossed, it triple crossed, it tried to go up, resist, tried to go up again, and it's resisting inside the alligator jaw. 4 hours, it couldn't go any higher. Once this wick holds, it's going to create that hook shape I like to draw, and it should sell off for at least 4 hours, at least 8 hours, at least 16 hours, and at least 20 hours if we're lucky, okay? Now, if all of that creates a new lower low, then we're phenomenal. If it attempts to sell off for 16 hours and we're within this range, then this is a Fibonacci level, and support could really be holding, especially if you want to hold for 16 to 24 hours in this area, okay? But again, I am going to take sells. You're going to see me. And I anticipate the sells that I take now, I'm putting no stop loss on them. If I wake up and it's gone and price is up here, I'm looking to take more sells because every time price touched my 50 EMA, look what it did in the past. Sold off for 4, 8, 12, 16 hours. Sold off. Look, it broke through my 50 EMA, and what it did, sold off 4, 8, 12 hours, retested 16, 24 hours, broke through my 10 EMA over here. What it did, create the first leg of the M, pulled down. All this right here is what's called a neckline. So if you draw an M on this thing, the M would start from here. This would be the neck area of the M. This would be the second top of the M. And once price breaks the neckline, you can understand, or if you've been trading for a while, once price breaks the neckline, you know that it's going to automatically go here guaranteed, or it's going to even create new lower lows depending on how patient you are and how much you trust the analysis. So again, this thing is sitting right here for the next 4 hours. It should melt off, or till 1 o'clock. It should leave here and it should go lower. If by 12 o'clock, it's under here. By 11 o'clock, price is 149. We're feeling really good. And I said, once price breaks 149, we can expect it to re-challenge 148 like it did yesterday. If it creates a lower low and it breaks 148 into 147-ish, 147 anything, as long as it's lower than 147.92, you can take profits, or you can understand that it is going to turn around, and it's going to turn around, probably retest here, maybe even retest here. But as long as the retest is not higher than this, then the sales is still valid. And once it turns around again, it's going to make a new lower low deeper than 147, okay? So if I know price is going to make its way down here guaranteed, I don't want us to take or lose this money anymore right here, okay? So what I've been working on is trying to make sure that, hey, once price is down here and I really feel like the trend is over, then we take all the re-entries that we maximize, we close all those, we wait, whether it take 4 hours, 8 hours, 12 hours, or even though I'm not a counter trending fan, if I see a confirmation like this, then I know, hey, it's going to buy to the next resistance area. If I'm awake, I might as well risk 1% right here, knowing that it's going to go here, guaranteed TP1, go here, TP2, or if I'm lucky, it might even push to TP3 right here, okay? So Forex is all about controlling your greed. It's all about controlling your re-entries. And again, typically, if you look at something on the H4, this H4 support resistance level, again, these are my EMAs. The blue line is the 10 EMA, the red line is the 50 EMA, the white line is the middle Bollinger Band, aka the 20 EMA line, okay? Now, the same way you see these colors on the H4, if I drop down to my M5 chart, you guys see the same colors, the same lines on the M5, right? Now, everything works exactly the same concept, support, resistance, the line curving. But as you can see here on the M5, the line curves a lot, okay? So if you try to find your trend on the M5, you're going to lose a lot of money. However, if you look at the daily, you realize that, hey, this thing doesn't really change a lot. Look at what happened, guys. This is the month of January, okay? Remember, I told you the blue line is going to go to the top and then it's going to automatically curve. From 159, I knew this thing was going to sell its behind off past here, guaranteed. And I knew it was going to create new lower lows. And I had a few friends talk me out of it, help me lose money out of the way. And once I cut them out the way, I said, no matter what, I'm never going to go against my strategy ever again. Because this is the daily. If you just caught every daily wick and say, hey, I'm just going to take one trade a day, I'll come back tomorrow, you just got to understand it. So again, this is from January. I knew that UJ wanted to sell and keep selling, okay? Same way I'm telling you guys, I believe UJ wanted to sell off for all of February or up for all of March, okay? It curved in January, and once I got this cross right here, I started feeling how I felt last year when my indicators were telling me something, but my feelings felt differently, and my feelings cost me so much money when my indicators wanted to pay me every time. But the question is where, guys? Even though it crossed here, it's not good to buy here. It's not good to buy here. It's not good to buy here. So where is the best place to buy? That's where I created the concept, or where's the best place to re-enter the market? Let me zoom in so you guys can see this, okay? I need you to see this. That looks a bit better. This is where I created the concept of an alligator jaw, okay? I'm gonna take a screenshot and I'm gonna draw this and I'm gonna drop this in the Discord, okay? Bam. When I look at the markets and I start saying, hey, let me make this simple as a video game, okay? I backtested this thing for years, guys. I promise. You could put my indicators on any chart. You can backtest it for as long as you're bored for. And once you see what I see, then you'll be like, man, let me test it. So bam. Once I got this curve right here on the daily and the blue line, once the blue line started curving and it crossed right here, that's why I'm always circling my screenshot, guys, so you know why I'm doing it. Once I see this cross on the daily, I understood that not only did it cross on the middle Bollinger Band, it's going to eventually cross on the red Bollinger on the 50 EMA, and it eventually cross its way to the red, to the golden line, my 200 EMA. If I'd have just held my conviction from 159 and know it's going to come to guaranteed 152, no matter how long it takes, and just takes reentries on every lower high, this can be another way of trading if you're patient enough to work the markets. There's all different ways of doing it. But again, do you have a strategy that you can back test and say, hey, this thing seems like it repeats itself 9 out of 10 times every time I test it? So, bomb. So, move the circles out the way. Now, the best place to enter any candle, again, a candle could be 1 minute long or it can be a whole day long, okay, guys? Actually, let me finish marking this up real quick. So again, I saw the dots right here. This created a level of resistance for me. And once I saw the curve, I believed it, okay? Especially when I saw this right here, it gave me a tweezer action. If you know what a tweezer is, you'll understand. If not, I'm gonna drop some screenshots in the Discord eventually. But once I saw this tweezer action right here and the tweezer made price curve, what I like to call this, the curve and the cross, is what I call a change of structure, okay? Change of structure, guys, means if you're buying before, forget the buys and you better start selling or else. If you are selling before, forget the sells and start buying. I don't like to believe change of structure unless it's H4 or if it's on a daily. If it's on the H1 or definitely at M30 or lower, I don't believe it because those are where they fake you out on. They might let you think it's good for 60, 80 pips, and all of a sudden you get slapped for minus 200 because you weren't paying attention to the higher time frame. That's why we analyze from the top and we work our way down, okay? So, bomb. As we're on the markup here, okay? Once I got that curve right here and I saw that the red line was playing support, and the red line's playing support, again, the 50 EMA, again, they're EMAs, but I want you guys to understand these lines, they're moving support and they're moving resistance. Okay, Adrian, what's the support area? Support area, think about us walking on the floor. Because we walk on the floor and not on the water, we don't sink. Look how price, when it touched the red line, it refused to drop any lower. What price is saying is, hey, for at least the next few days, I don't know how long I want to stay here for, the sales are done. You could fight around and mess around if you want to, but I'm done for now. So, okay, so let's say self, we missed the big drop, okay? But we understand trading and we want to believe AD strategy, okay? We see that, hey, the blue line already crossed the white, but we already know it's going to cross the red eventually. It's going to cross the gold eventually, and it's going to keep doing its thing, okay? We just don't know for when or for how long, okay? Now, what you have to do afterwards is just make the money. Each of these days is given a minimum of 50 to 100 pips minimum, okay? If you can't make your money on 7 to 150 pips a day, then we have to work on your trade management, okay? Especially when they're stacking up like this. All you have to do is take an entry on the week, which is the highest point of the day, okay? Or the highest area you think, because you already saw the cross down and you fell off eventually. 1 wick right there. It took 1 day, price still didn't move. 2 wicks right there, price didn't move. 3 wicks right there, price didn't move. 4 wicks right there, price didn't move. 5 days, price stayed on this support area right there, okay? Day 6, it finally broke through. It retested day 7, and it broke through again day 8. It retested day 9, day 10, day 11, day 12. All the way till day 14 don't give you a retest, okay? So even if you said, hey, I'm just gonna try and take the best entry that I could find for the whole day. Once you see that price eventually cross the red line, you can get excited because all of these days are in profit and none of them should get stopped out. Or even before they get stopped out, you should have took your money all the way down here. Once you get 2 green days in a row, there's no reason why you don't take all your profits, secure all these entries from before, and you're waiting for the next daily resistance that you can believe. Because you know the last time price hit a daily resistance, it sold off for 5 to 10 days. Look at what happened when we were patient. 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day. So again, guys, there's a lot of money to be made here, okay? Now we're back in the present, okay? This is where price is presently at, okay? On the daily, I believe price is done given the high for the whole day, okay, guys? That is my personal belief. Just like yesterday, how price didn't come up or just like 2 days ago, how price didn't touch the blue line. It sold all the way off and then it closed up here. I believe that price is done pushing for the day, okay? Now, when we take a look at the H4, on the magnifying glass, we see that, hey, remember that that high point that I was telling you about 4 hours ago? Remember this high point and how I told you that, hey, it's lower than this previous wick? Because of that right here, and now price is breaking my 149.16 marker, I can wait comfortably knowing that it's going to break 149 eventually. And once it breaks 149, I can wait comfortably knowing that whether it takes another 4 hours or another 8 hours or however long it takes, it's going to come all the way down to 148.10. And if I get more than 148.10, then that's gravy. But from now, currently, right now, if you take an entry and put a 30 pip stop loss on it to 148.10, that's 116 pips in profit when it finally gets there. And that can happen before 10 a.m. tomorrow, just because of how the pattern repeats itself, not even feelings. So do we have any questions about anything I've discussed so far? Anything that sounds like French to you guys? What's on your mind? Oh yeah, if you can unmute yourself too if you have any questions or want me to go over any other charts in particular. Oh, let's say we can catch a re-entry here. The H1, what's the M30 telling me? The M30, what's the M15 telling me? M15 told me it pushed up last 15 minutes. It met resistance, right, guys? And for 15 minutes, this is the 10:15 to 10:30 candle it pushed down. And from the 10:30 to 10:40 candle right now, it's pushing up, all right? Now let's drop down at the look at the 5 minute, because now I need a re-entry. So you guys are going to see my whole re-entry strategy, okay? Again, we're still on belief for sales for the whole week, okay? Or especially for the rest of the day. Do you guys see how this thing is looking like it wants to make a M already? Bam, 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 bam. Actually, give me 1 second, all right, guys? Give me 1 second. Let me pause the train and pause. But this is what I'm anticipating. Price does this again, where it breaks 149.02. We can expect this all the way down to 148.10. Well, actually, I could write that better. 148.10. Let me get that for you right now. I got you. Yeah, sent it?
Yeah, I'm sitting right now. I'm writing down.
All right, for sure. Okay, guys, so let me see here. As I was saying, yeah, we're looking for re-entries now, okay? So re-entries, the name of the game, okay? Again, let's take it back to the H1. The H1 is showing us, hey, this thing, it resisted for 1 hour. This is what, the 10 o'clock hour, 9 o'clock it resisted, 8 o'clock it touched the 50 EMA resisted, 7 o'clock it touched the 50 EMA resisted. Guys, we have a cross right here, okay? This is a super resistance area, but it's not impossible for price to break through it, okay? We just got to do this calm. Got to do this calm by taking the best entries, all right? This thing's starting to. Oh, don't leave us yet. Guys, do we see how on the M5, do we see on the M5 how it attempted to go higher, but you see how the blue line's already crossing over here? This is the 5 minute, okay? So bomb, this is the high. You take an entry right here, stop loss about right here. Price is going to eventually cross underneath the white. It's going to eventually cross underneath the gold. And once it crosses underneath the gold line right here, the 200 EMA, which is also 149 to 148, 149.02. Oh, yeah. But first challenge, we got to break here. We break here. We're doing good. Let's take a look at the M1. The M1, as we can see, that area on the M1 is also the 200 EMA. But guys, guys, have no fear, because as you see how it crossed right here and it crossed the gold line, it's going to eventually, oh yeah, look at the M1, guys. Now you know, now I could show you a lesson. This is called an entry pattern, okay? Do you see how price came all the way up and this candle made a little wick, but this candle engulfed it? Because of that, I know without a shadow of doubt, and this curve right here, price should eventually make its way down and pass here. Once it break the 200 EMA on the 1 minute, price is going to challenge the 200 EMA on the 5 minute. Once it breaks the 200 EMA on the 5 minute, that's when we could really get excited, because once it breaks 149.02, it's dropping another 100 pips to 148. Any questions? I want to make sure I answer everyone's question. I know we went over a lot today. Started with risk management because that's the most important thing, because we're investing, not gambling. Then we discussed trade management. Trade management, another important thing. What else? What else is there to discuss? We discussed how to find top-down analysis, how to start from the weekly. See if there's actually wait. Does anyone need my indicators or need my settings for what I use so they can have the same tools? Actually, no, we'll leave that for tomorrow. You guys pop back up tomorrow. I'm gonna open up my pro. I know a lot of people don't really have MetaTrader. I use the demo because that's where I have all my or it's easy for me to do my markups there. But I learned like last week or 2 weeks ago, I can actually put my Bollinger Bands and all my settings on liquid as well. So it allows me to track the flow of price as well, okay? So I use this as long as it looks like there's a lot of confirmation tools, man. Again, guys, all the tools are for our benefits, okay? What's the mechanic exchange taking out the engine if you don't have the tools for it? But anyway, if there's no questions, I'm going to leave the floor for Q&A for about 5 minutes. And then other than that, I'm good to go. You guys could unmute yourself, ask any questions. The floor is yours. Man, this thing taking off already, guys. If anybody got the top of it, they're already in profit, almost 15 pips already. It looks like it's trying to pull back a little bit. Let's see if we could catch something. Yeah, our best entry point might be here or here. Looking at this thing, might as well wait for the next 15-minute candle. I have a feeling the next 15 candle might push off and attempt to test this thing one more time. Yep, and there we go. It's pushing off. Now let's see what you do at 11 o'clock. The H1, yeah, the H1 is already here. Guys, if price creeps up, whether I'm not paying attention, UJ sell anywhere close to 149.20. And once it breaks 149, just have faith knowing that we're making our way to 148 within the next 24 hours. Other than that, seems like there's no questions. I want to thank everyone for showing up to Faith-Based Trading weekly midweek review of USD JPY. Today is Wednesday, March the 5th, 2025. And yeah, have a phenomenal day. And if you have any questions, the Discord is open. I'm all ears, man. Peace, love. See you guys next time in the markets. Up there goes the 5-minute pulling back like I wanted. That's why we didn't rush the process. Now, what are you doing? M15. M15, you are retesting my 200 EMA. Just like the last time. I'll exercise a little patience, but I really like this entry. This entry along with this wick with a 30 pip stop loss, there's nothing wrong with it. Nothing wrong with it at all. Also, again, I don't like entering big positions anymore. I typically basically just use my balance as my stop loss. That's the best way I could explain it. Look like I had some entries from before. Each entry is down approximately 7 pips. Rough up 7 to 10, 12 pips, even a little more than that. So yeah, now we do some dollar cost averaging and we use the new 1% to take the better entries. So that way, when everything starts going in profit, not only do they all turn green, but we have more money, higher percentage. See if we could go ahead and knock out our 5% daily goal and be on our way. Okay, so 22 got me 4. Sometimes you got to cut the losses early. Cut you. Cut you. Cut you. This is all trade management, guys. Again, I'm doing all this because I want to make sure once it takes off, I'm at the best position possible. And then I use my patience and use the profits for the next reentry opportunity or the next best reentry opportunity. If I wake up tomorrow and the $18 died, we'll come back New York session with 2% and we'll aim for 10%. Bada bing, bada boom. Position, tools, all orders, TP, 148.15. View, count metrics, okay. Got about $1 in free margin. Worst positions down 4 pips. You know what? Let me give it a 30 pip stop loss tonight, guys. All orders, stop loss, 30 pips. So let's see here. I'm risking the 30 and I'm going for 149.23. Yeah, I gotta go for at least TP 148. All right, guys. So I'm risking 30 pips for the ability to make 120. That's 1 to 4 risk to reward ratio. And we'll see where that takes us. Have a phenomenal day. It's been a pleasure. And yeah, God bless. And I wish you guys the best of luck. Stick to it. A year from now, let's see where we at. Can't wait. Are you at zone? Came right in time. Yeah, fire.